Hello, ladies and gentlemen. I'm your host, Ash, and welcome to the Ash Show. So, as you can see, I'm finally being consistent with the uploads. No more long waits between the videos. And the video that I'm doing today, hopefully, is going to be a weekly thing. So, I'm very excited about this one. Next week is going to be a short week, but I think it's going to be full of money-making opportunities. I got tons of plays for you guys today this week. So, today I'm going to walk you through the major economic events, earnings that are happening this week, and my watch list and a few bonus plays that I've got in store for you today. So you're gonna want to watch till the end. You're really gonna like the bonus play I have for you. It's a potential 10 bagger. Okay, so before we go into the plays, please take a minute to subscribe and like to this video. It would really help me out. I'm just starting out. You guys already know that everything on the Ash Show is free. So if I have helped you out in any way, this is the best way to support me. Also, please do check out the links down below. I have my free Discord and Twitter where I post my intraday plays. If you're looking for my exact entries, if you have questions, anything you'd like to know, feel free to hop in there and just ask me whatever you'd like. So let's get this show started. Alright, so earnings that I'll be playing this week. But before we go into the earnings, here's how I play earnings most of the time. So first things first, I always buy shares wherever I can. Usually that's with small caps or shares that are usually cheap, but mostly I do go with options. Now I do this to avoid Ivy Crush, right? But if I'm going with options, I buy at the money options, which means options that have a strike price that is very close to the current price of the stock. And ideally I'll be buying these options 1 to 2 weeks before the earnings call. And the reason for that is Ivy spikes a lot during the last couple of weeks before the earnings call, so you want to get in early before it does. Now the second thing is lot of size plays, right? So for me, my account has grown a bunch, so my normal position size is 10%. What I do for earnings is I do 5%, right? This is what I do. You can do whatever you like, but keep in mind that earnings are very fickle, very unpredictable. You can have everything go your way exactly as you expected and still end up losing money due to Ivy Crush or due to something unexpected, or just the market wants to, tank the stock when it beat everything. Speaking of which, what you want to be looking for here is guidance. We've seen this happen a lot in the past year. We have companies that have beat EPS and they beat revenue with bad guidance, and the stock just tanks, right? So if you can predict the guidance, you can predict the direction of where the stock will go. So now that that's out of the way, let's get into the earnings plays themselves. So on Tuesday, which is the 6th of September, we have after close GitHub Labs, right? GitHub Labs is GTLB, right? This is a DevOps software company. The estimated time the earning numbers will be released is around 4:05 Eastern Standard Time, right? So the estimates here are a loss and earnings per share of 23 cents, and they're expecting to have revenues of $94 million. Now, if we look here at the option chain, we see that there was an unusual option trade of 2,500 contracts of the $75 call that expires on the 12th of October. This purchase was in August. I could not find anything more recent than this. This is the most unusual trade that I've found, right? So options are already pricing in expected move of 16% on earnings. That means the stock could go up or down as far as 16% on this earnings call. Now, what you need to know is that JP Morgan has downgraded the stock, and when that happened, the stock fell down 18%. Okay, so this could be, and this happens a lot. We see it happen a lot, is that an analyst will downgrade a stock right before earnings, only for them to grab cheap shares, and then the stock runs on excellent earnings call. So it could be that sort of play. It could be something else. And one more notable thing here is, so after the lockup period expiration, and one important thing to note here, 6 months, a little bit more than 6 months actually, after the lockup share expiration, we have had only 280,000 shares sold by insiders. Just to put that into reference, that is 0.2% of the outstanding shares of this stock. This is almost nothing. That means all insiders, all employees, all directors, everyone in the company is very happy to keep their stock. They're not looking to sell it at this price at any time now, which is very bullish in my opinion, right? So for these reasons, my play here for this one will be the September 9th $49 strike expiration call. I believe this stock can run a lot. If it does beat earnings and they have good guidance, they will probably make up what they lost from the downgrade, maybe even some more. So we're looking for a big move here to the upside if that happens. So Wednesday, the 7th of September, we have here two plays. The first one, before the open, we have NIO Incorporated, ticker symbol NIO. We all know NIO is an EV car manufacturer. The earnings will come out at around 6 a.m. Eastern Standard Time. We're expecting here a loss of 17 cents earnings per share, and we expect them to generate a revenue of $1.4 billion. Right now, if you look at the options chain, we see an unusual option trade of 9,000 contracts of the $19 calls, which expire 9th of September, right? This same week. Okay, and this was purchased on Friday. We have here a very big bullish options play that happened just a couple of days before the earnings call. So this is pretty clear what the big whales are expecting the stock to go. So options are already pricing in around a 10% move plus or minus on earnings. And one thing to note here is on the latest delivery report, NIO delivered 10,677 vehicles in August of 2022, which is a 81% year-over-year increase, which strikes me as pretty bullish, which seems that they have been on track for deliveries, which is good. Also, something very, very important to keep in mind, that NIO will not be affected by the chip ban that's affecting Tesla right now, or AMD or Nvidia or any of that stuff, because they're not an American company, and they are no longer in danger of being delisted, right? Because right now there's a deal going on between America and China, and it seems that they're actually not going to delist the companies. They agreed to allow them to audit the companies. So for now, NIO seems to be, out of the woods. So for all these reasons, my play here will be same week, 9th September. I'll be buying an $18 call. Okay. And I'm basically following the options flow on this one. I think that's a substantial buy on Friday. I think guidance will be good here, so I'm just going with the flow on this particular play. Now we have our next one, and I'm sure this is a very, very highly anticipated earnings call, perhaps of the week, actually, is GameStop. Okay, so GameStop, ticker symbol GME, the estimate earnings time will be around 4:05 Eastern Standard Time. We are expecting a loss of 41 cents on the EPS, and we're expecting a revenue of $1.27 billion. Okay, now we have not seen anything recent, but around mid-August we've seen 7,600 contracts being bought at the $20 strike puts that expire the 16th of September, right? This seems like an earnings play here. Keep in mind that options are currently pricing a 15% move on earnings, okay? Now, guys, I know there's a lot of apes out there and people who love this, but let's be frank here. NFT marketplace is not making any money. There has been no major game releases the past quarter, no studio deals that have been struck with GameStop. As a matter of fact, console sales actually have stabilized or are slightly declining. And let's not forget what Ryan Cohen did with the folks on BBBY. So for all these reasons, I'm gonna go with puts. I'm gonna go with same week, 9th of September, the $24 strike put. I really don't see how this one does not miss, so that will be my play for this one. So on Thursday, the 8th of September, we have, after the market close, we have DocuSign, which is DOCU, right? So this one has been a COVID play darling, right? So the earnings time is around 4:05 Eastern Standard Time. We're expecting a positive EPS actually of 42 cents and revenue of $602 million. Now we have seen an unusual option trade off at the 65 strike puts, which expire around the end of December, 16th of December, right? Those were worth around like $3.8 million, right? This was just done on Friday. It seems that people are expecting DocuSign will die towards the end of the year. Okay, so we currently have options pricing in around a 20% moves on earning, right? So, and if we look at the chart, if we look at the chains, if we look at the at social media, like this one has been screaming bearish, right? We've seen a lot of puts being bought on Friday and the past week. and they just seem to keep on coming and coming and coming. So I'm just gonna go with the flow here. I'm not gonna go against the trend. I'm gonna buy a $53 put that expires same week, 9th of September. You know, just gonna play it safe, go with everything here. My God, the charts, the options flow, everything is just saying go puts. Alright, so the last day, Friday, the 9th of September, we have our final earnings play, which is before the open. We have Kroger, ticker symbol KR. So the earnings time is around 4:05 p.m. Eastern Standard Time. So we've seen here an unusual option trade at the strike price of $48 of puts on the 9th of September, right? So they're basically, it expired the same date. This one was worth around $600,000. This is pretty bearish. This is someone straight out saying, I'm putting $600,000, same day expiry as the earnings, expecting the stock to massively drop. Our options are pricing here a 7% move. So here, actually, I'm not gonna go with the flow. My play will be same day, 9th of September, $49 strike price calls. And my reasoning for that is Walmart beat and Home Depot beat. So I'm going against the flow for this one. I'm gonna go with calls. I'm just gonna follow, you know, all the other plays in the same niche here. Alright, so this basically wraps up earnings for this week. Like I said at the beginning, usually I would buy last week, right, to avoid the high premium from the IV spikes. But what I'm gonna do right now is I'm just gonna place my calls and my puts and everything on Tuesday morning open. And remember, lotto size only. Don't go nuts with this. Just play safe, stay safe. Lotto size, small size only. Okay, so this brings us to the second portion of this video, where we talk about the major economic events happening this week. So basically, overall expectations for this week across the board really is we basically get a relief rally all the way up to the Jay Powell speech, right, which is happening towards the end of the week. So my expectations here for the SPX is that if that does happen and we get a relief rally, will be somewhere between $4,017, which is a major resistance, and the 50 MA on the daily chart, and the 4,120 level, which is another major resistance, and the 21 MA on the daily chart. So between those two levels, between the $4,017 and the $4,120, my expectations if we get a relief rally, which I think we do. RSI is a bit oversold here, so I think we rally into the Jay Powell speech, right? And I'm just gonna run through the events this week and you will see why very quickly. I'm gonna explain that. So Tuesday at 10 a.m. we have the non-manufacturing PMI, which beside the Jay Powell speech is the only thing of real substance this week. Wednesday we have at 8:30 a.m. before market open, we have the balance of trade for July. At 12:35 p.m. we have Fed Chair Brainerd speaking. We have on Thursday 8:30 a.m. the initial jobless claims, and we have at 9:10 a.m. we have the Fed Jerome Powell speech, right? On Friday finally we have at 10 a.m. the wholesale inventories, and at 12:30 p.m. we have Fed Walker speech, right? So basically, as far as the short-term market reaction is concerned, you know, which is basically the only thing we're concerned at this moment, all of these are non-events with the exception of the Jay Powell speech and the PMI read. Okay, so don't get me wrong, the other things are very, very important for the overall picture, but the idea here is just to play these specific events on the chart on the SPX, right, as scalps or short swings or whatever we're gonna decide here. So, and one very, 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 very important thing to keep in mind, and just understand that this is a personal theory of mine. I've seen people starting to think the same thing, mostly a jokes honestly, but this, I don't know, comment down below if you have been noticing the same thing. My feeling is that like market reaction to numbers has been super mixed, right? We get market dumps on great numbers and we get pumps on very, very bad ones, right? So basically my theory here is the market basically, you know, by market I mean like institutions, hedge funds, big market movers basically use these events to either run or dump based on what the chart is indicating, right? So right now we have the RSI very oversold on SPX, and the expected move here is that we get a relief rally before it starts falling down again, right? So going with that theory, my play for the next week for the SPX will be as follows. So I'm expecting pre-market, or as soon as the futures open, I'm expecting a continuation here of the Friday dump, right? So I expected all the way from futures open all the way up to the PMI read. I'm expecting a market dump here, so I'll be taking SPX puts right when the futures open, and my targets for those are either 3,860 level, which is the next level of support we have here on the chart, or the PMI read, whichever comes first. I'm not going to be holding this put, during or after the PMI read. Now, once I'm out of that, my expectations is that the PMI read is what will trigger the relief rally, which I think will extend all the way into the Jerome Powell speech on Thursday. So the only thing I'm not sure of here is the market collapse or the capitulation event or the big drop, whatever you want to call it. I'm not sure whether that happens. And if it happens, I'm not sure if it starts at the Jerome Powell speech, which is on Thursday, or will it be once we get the CPI numbers, which will be on the 13th, which is the week after. In either case, my calls during or right after the PMI read, if it goes the way we're expecting to, is I'm basically looking for two targets here. I'll be getting into SPX calls, and my first target will be 4,017 mark, and the next one will be the 4,120 mark. And just to be safe, I will basically be getting out of these calls, at either these targets, whichever hits first, or before the Jerome Powell speech. I'm not going to be holding anything going into the Jerome Powell speech. I don't know if the rally will extend, or we start getting the downfall, and it gets exacerbated by the CPI numbers, and then the Fed meeting towards the end of the month. So we're gonna see. And if we look here at the chart, you can very easily make your own plays. We have here the levels of support, as you can see, and the levels of resistance, right? So basically, once we get the PMI, these are the numbers you want to keep your eye on, the PMI and the Jerome Powell speech, right? Watch for the market, see what it does. If it pumps, these are your targets on resistances, and if it dumps, your targets are on support. So just keep one thing in mind, that we're currently oversold, so a relief rally is likely the most expected option. All right, so now that we have these things out of the way, I'm gonna go through my overall watch list for the week very quickly before giving you my bonus 10 bagger play. Let's start the watch list with the week with crypto. Okay, so my favorite crypto to play, which I always play, is Ethereum. So we can see here that Ethereum has been channeling between the $1,700 mark and $1,400 mark for the past week or so. So basically, I'll be looking for a break of the channel either way to take a position here. So basically, I'll be looking to kickstart my 1K to 10K crypto futures channel, right? So crypto futures challenge. I've been asked a lot in my Discord to do that. We have a lot of people who play crypto, and I've been asked multiple times to do that. So I'll be updating you guys here on YouTube and in my Discord, and of course on my Twitter on the progress of this challenge. But simply said, I'll basically take 1K and trade crypto futures, which will basically either be Ethereum or Bitcoin. Okay, one point to add here is that till we get a breakout out of this range, out of this channel, I will basically be scalping. If we hit resistance and we go down, I'll be scalping puts, and vice versa if we hit support and we bounce back. So moving on to the next one we have here, we have Microsoft, which actually confused people a little bit. So Microsoft basically had a $22 billion AR headset contract with the US Army. Okay, so what happens here is people thought that this is a year-old news and is being misreported. No, it actually was put on hold, and they recently just approved it on the 2nd, on Friday. Okay, so my expectations here is that if we get relief rally like we're expecting, the market goes up, Microsoft will run pretty hard on this news. So basically, I'll be looking for call entries here. My first target would be the retest of the 50 MA on the daily chart, which is the 270.5 level. Okay, and if the market tanks, I'm looking at 245 support as my first take profit target. So that does it for Microsoft. Now let's have a quick look at Apple. Okay, so Apple has events starting on Wednesday. We all know that. They're expected to reveal the iPhone 14, the Apple Watch, a whole bunch of stuff. Okay, and if all goes according to plan, we usually get a little pump off this after that a market run or a relief rally, as we currently sit right at the 50 MA on the daily, right? And the 155.6 support. We can expect with a market rally a very strong bounce off this level, and we can see it very quickly going to the 166.5 level, which is the 21 MA on the daily. But if it tanks, we can see 130 very quickly, so keep an eye on that. So the final stock on my watch list this week is Sava, which is SAVA, which is a biomedical company that works on Alzheimer drugs. Okay, so we have seen $3 million in inside buys in the past month alone by directors, but most importantly by the chief medical officer. If someone knows anything about whether these guys will pass the phase 2 and phase 3 trials, it is probably this guy. Okay, and one very important to keep thing in mind, there's a million reasons why insiders would sell a stock. There's only one reason why an insider will buy a stock, and that's because they expect the stock to go up. They're insider, they have some inside information, they know something big is coming in the horizon, and we can see here $3 million in buy. That is a substantial amount. These are directors, these are chief medical officers. We're not talking about very rich people here, so it's $3 million is a substantial buy here. Okay, so given the low float of $37 million and that 33% of this float is shorted, okay, this thing ran to $140 last year. Okay, this thing really runs quickly, moves very quickly here. Okay, now one thing to keep in mind here is that we got the phase 2 final data. Okay, the initial data came out, it was positive, and we get the final data towards the end of this year, and we might get some initial phase 3 data towards the beginning of 2023. Okay, so I'll be buying far out expiry calls on this one. So I'm currently eyeing January or February or maybe March. I have not decided yet. I am in no rush to get into this play. I am looking to see whether we drop down to the 15.4 support level or we just keep going higher. I am looking for an entry here. We can afford to be patient on this one. We still have time. No rush on this one. Okay, so if you guys have made it this far, I'm guessing this is what you've been waiting for. And this is a largely, for some very weird reason, under the play radar, right? You wouldn't expect that once you know the stock I'm talking about. Okay, so my possible 10 bagger play for this week is DWAC, Truth Social. Okay, so DWAC has a deadline to merge with Truth Social on Tuesday. Right, this Tuesday, the 6th of September, okay? And if that does not happen, which thanks to the SEC investigation, it won't, right? The stock will dump back to the SPAC floor price, which is $10. It's currently at $25 right now, okay? And the only reason why it's not already there, if we think this is an eventuality, it's gonna happen, is because they're holding, after market close, a shareholder vote, okay, for an extension, okay? They wanna extend the time for the merger to happen. But in order to do that, they need 65 shareholder approval, right, to get the 6 months extension. Okay, most people are unaware, most shareholders, most retail shareholders are unaware of this happening. And keep one thing in mind, that it takes a lot of effort, and a lot of very successful and investor beloved companies tried to arrange stuff like this, and they never succeeded. This is very hard, okay? So to me, this seems very unlikely that this will happen, okay? And not only that, so basically these guys, if they do get the extension, they have to put up $6 million or 10 cents per share as collateral to get the extension out of their own pockets, okay? And if the merger does not go through for any reason, they don't get this money back. And it is very obvious at this point, no matter where you stand on the political spectrum, that for very political reasons, the SEC is stopping this from going through. The SEC is just, you know, it's holding it for a long time. It has been holding it for a year plus now, okay, which was the first extension that they were given. And I don't see it, even if they get the 6 months extension, I don't see how you know, the merger goes through in 6 months or even a year. It's the SEC is like doing their best to stop this. Okay, so my play here is a little bit risky. I'm gonna play same week 9 of September 25 puts here. Okay, my thinking is that it's not gonna pass. It will tank to $10, and if it does, this will be a 10 banger right there. One very important thing, if you are gonna buy out of the money puts, and I've seen people make this mistake before, please do not buy $10 puts for SPACs. I've seen this happen. Just so you know, the floor price for a SPAC is $10. That means usually the lowest it will get is $10. It can go a little bit lower, but it usually goes back up to $10. Okay, because it's guaranteed that if they cash out, the original investors get $10 per share no matter what. So if a contract or a put is written at $10 and you know, like the merger does not go through and it falls all the way back to $10, $10 is the floor price. That makes this worthless contract, since it will not go beyond $10 and no one will be interested in buying a $10 put contract. So please don't buy the $10 put contract. That being said, this is my 10 bagger play for this week. I hope it works out for me. I hope it works out for you. If you're looking for intraday entries and exits, if you're looking for specifics, if there's anything you don't understand, jump into my Discord below. It's 100% free. If you have enjoyed this very long video, you can see I put in a lot of effort into this one, so please give me a like, subscribe to my channel, share this video to whoever you think might benefit from it. This will help me grow my channel. This will be your way of saying thank you, and I thank you for your time, and hopefully we make a lot of money this week, and I will see you next week with our next plays. Ash out.